Good day, ladies and gentlemen, and welcome back to this channel. Today is a bright Friday, July day. It's a hot day, and this was unexpected because for me, I thought July is supposed to be a very cold month, but it is turning out to be hot and warm. Not that I'm complaining, I'm okay with it. It's just that it's an interesting phenomena. I didn't know that July can have the sunshine that we are seeing here. But having said that, there is also the other side of the finances, that the government is creating heat, creating some warmth in the financial bits. There are moves that the government is making that are creating a lot of discomfort, we would say, to some quarters, and very lucrative business in other quarters. So it's a very interesting period to see what is happening financially. So today I am here just to look at some stories that have formed the headlines of our business news as regards to government borrowing locally, and then I just give my take on the same. So if this is your very first time, kindly think about clicking there and subscribing to this channel. Let's get this channel to 1,000 subscribers or more, and then of course move on to the next level. But having said that, my story number one for today is from KRA. KRA did a press release yesterday that talked about the revenue collection for 2022-2023 year. They just closed the year, and they are saying that the revenue collection grew by 6.7% in the financial year 2022-2023. That was equals to 2.166 trillion shillings, Kenya shillings, vis-a-vis what they had collected last year, the year 2021-2022, which was 2.031 trillion. In any case, in the last 5 years, the collection of taxes in this country has increased by a whopping 37%. I wonder what we were doing before. People are not paying taxes or what? I don't know, but it has increased by 37%, and it's bound to increase more because the government needs more money to do the infrastructure that they are thinking of doing. It needs more money to run the government, which is bloated by all means. So they will continue to push us to pay taxes. And you know, the finance bill came and more taxes were increased. So KRA expects that by the year 2024, they will be able to raise 2.768 trillion. And by the year 2025, the financial year 2024-2025, they will raise over 3 trillion Kenya shillings. Remember, our budget for this year was 3-point-something trillion. So that is what they are targeting to raise. So that is interesting news. It shows that there is some efficiency that is coming from that end, according to, because the government has no other way of raising funds apart from either borrowing or taxing its citizenry. My story number two is, and before I move to the story number two, if you've not been paying your taxes, get ready. Because when they digitize the taxation payment, it will be very hard for you to avoid or evade tax. So get used to the idea of paying taxes. That is that. Story number two. The Business Daily today carried a story that had a headline that said, how markets are shrugging off opposition-led protests. And I want to read you a caption of it. The Nairobi Stock Exchange, the Nairobi Securities Exchange, it's actually nowadays called the Nairobi Stock Securities Exchange, yesterday recorded a gain of 10 billion in investor wealth, and it also recorded a 40 billion jump in market capitalization as per last Friday, when the new round of protests began during that period, that particular week. So this is interesting, because if indeed political instability causes the investors to run away, where are they coming back? In fact, it continues to say that these investors have a big influence in large blue chip stocks such as Safaricom, Equity Holding, EABL, KCB, whose movement has continued to be massive. So it means that these investors are coming back, and they're coming back to invest in this country where there is mandamano, and where there is an expectation of political instability. It begs me to ask the question, what really is causing them to come back? What is it that they know that we, the citizens and the kawaida men and women, do not know? Nini hiyo wanajua? Why are they coming back? Because for investors to bring back 10 billion Kenya shilling to invest in our companies here in Kenya, and I'm assuming a big chunk of that is from the foreign investors, it means that they have looked and analyzed and seen that either the moves that the government is making is going to be beneficial in the long run, or whether there is high inflation or not, the returns are good. So it is for us to open our eyes and to see what is it that they are seeing and we are not seeing. Or if we are seeing, let's make those moves. My story number 3, which is also very interesting, is the new frontier. You know, we have discussed bonds and bills, T-bills, bonds, but more so on bonds, infrastructure bonds, and all that. The reason why we used to concentrate on those is because they were giving better returns. In fact, the same newspaper talked about a caption here that says Kenya flirts with 17% interest on a 5-year paper. And it says that Treasury is increasingly taking costlier loans from the domestic markets as investors asked for 16.8% return on the 5-year paper that CBK floated. Well, it was able to raise over 38.6 billion Kenya shillings from that paper. And that is an interesting phenomenon as well, because, if government bonds are paying 17%, 16.8%, I wonder where banks are going to go. I wonder, because everyone will be taking their money to the bills, to the bonds, actually, not bills, to the bonds. So that's a cause to have a look. Of course, I understand what the government is doing. In a bid to curb the inflation, this is how you deal with inflation. You mop up money that is circulating in the market or in the economy. And this is what they are doing by borrowing locally. In fact, that leads me to my last story, which talks about T-bills, which is the new frontier. T-bills are usually government floated financial instruments that are short-term. Bonds are long-term, T-bills are short-term, 91 days. I think the other one is usually, like a maximum of 1 year or so. They're usually like, let me actually give you the correct one. It's 91 day, 182 day, and 364. So a maximum of 1 year. So these small bills are supposed to help the government collect money from, get money from investors. T-bills since 2015 has never hit 12%. Today, T-bills are trading, for example, the 91-day T-bill is trading at 12%. This is massive mop-up of money by the government through these instruments. Because people are going to move their money from banks, they are going to move their money from SACCOs, they are going to remove their money from under the mattresses, and they are going to invest in banks. No, they are going to invest in T-bills and bonds. So you have to be keen to know that this is going to lead to a massive change in the interest rates that are going to be charged even by the banks, because now they have to rethink on what to do. The kind of move that the government is making will have consequences, short term, I believe, but eventually it will lower the inflation to whatever is desired. So those stories tells me that there are moves that are being made by the government that are going to cause pain to us a bit, but they're also lucrative if you are well positioned, because if you are an investor, you're gonna make a kill. That is my time for today. My name is Geshure Irungu. I hope these stories will inspire you to go and do more research and know where you can invest more. Right, bye bye. God bless you. See you in our next video. Cheers.